Hey guys, so quick trade breakdown. Yeah, today was once again a really interesting trading day. Actually, was quite fun to trade, and yeah, we'll show you. Definitely learn something new. Also, like in addition with like yesterday. Therefore, yeah, really interesting. Right here you have the daily chart. So we scrapped yesterday's bicep liquidity, traded into the bearish fair value gap right here, and also traded to consequent encroachment of the new daily higher time frame gap. So dropping to a 50-minute chart, right here we have London highs, New York open kill zone high, New York open kill zone low, so sell-side liquidity, and as you can see down here, the consequent encroachment of the huge higher time frame gap. And right above here, or right here is the midnight opening price. So really, we sold off a lot, so really oversold. Also, like right here we have the 8:30 and 9:30 opening price. So, but first, before we drop to the 1-minute chart, I want to show you regular trading hours. So once again, we had a huge new opening range gap. So on regular trading hours, 280 candles, so that's trading conditions. We basically closed the gap right here. So yesterday's gap, we closed it with trading below it, and therefore you can expect basically that at this level there will be any kind of support coming into the market. So that's like real resistance and support. And we also have today's new opening range gap. So therefore, because we have trending conditions, we want to see NQ trade back at least to the upper quadrant and then basically continue with the trend. And yeah, so right here is yes is not really special. We don't have any kind of SMT within our sessions, so therefore yeah, nothing really special here. Now back to NQ. So let's drop to the 1-minute chart. And right here we have the 9:30 opening, and we just dropped lower, sold off, scrapped New York open kill zone liquidity, traded perfectly to the consequent encroachment of the higher time frame gap, into also low into also the smaller higher time frame gap right here, so which is within the huge higher time frame gap. We are within our macro, and we also like cleared out the equal lows down here, so let's say short-term run-on stops. Then we had a inversion fair value gap right here, we had a bullish fair value gap right here, and traded higher. And now it's getting really interesting. So I entered right here, and my first partial was right here, and I got I think stopped right here. Yeah, so I also re-entered right here because we're like I will explain it in a second, but I re-entered right here, got stopped right here, tried to short right here and got stopped right here, but I'm still on profit on this day, so I made around $48, as you can see right here. So that's for the day, because after like winning, I only risk half my risk with these two trades. So now it's really important. Basically, the market maker buy model down here is perfect. So because we are trading align with the high time frame, especially with regular trading hours. So we want to see NQ trade back to the upper quadrant of the new opening range gap. So actually it was around the higher time frame gaps right here, so above the New York open kill zone buy side liquidity. But because I did not really know if we would trade all the way back to the upper quadrant, I did something a bit wrong. So I regarded the move right here more like a retracement, and therefore I as you can see right here, I tried to take my first partial near CE, so consequent encroachment, and we had like the buy side liquidity right here, so I took one off right here, and then we traded almost to to the upper quadrant. So and then basically I got stopped right here. So actually at that point, that's basically the wrong approach, because if we know we can expand to the upside, especially because we have like still the upper quadrant way higher, we could target higher prices, and we don't expect that the move right here is a retracement, but is basically a market maker buy model. And that's the reason why the objective for a market maker buy model can only get completed with external liquidity, and therefore we trade higher. So also you can see right here on a 5-minute chart that we traded in really low resistance, so therefore that's actually what we want to trade, and that's definitely a market maker buy model. And so there are many so obviously there was a setup for a market maker buy model, but the difference between, or it is important that the difference is between a market maker buy model, which is only a retracement, and a market maker buy model, which is going to expand to the upside, targeting external liquidity. And why, or how can we difference these setups? So basically, for a retracement, we would only trade to the upper quadrant right here and then trade lower, as we saw yesterday. But in this case, it's not the case, because regular trading hours, the upper quadrant for the like new opening range gap is way higher. So therefore, we can expect that we will trade higher, and we do not have any kind of SMT, so we definitely should have not taken a partial this early, and also like be way more or like have a wider stop. We could have like just leave it here within the breakaway gap and just target higher prices. So our first target should have been could have been the upper quadrant, even if it's not a retracement, but just because, as you can see right here, it's like we enter high resistance a bit, because it's just a strong retracement, or like a speed bump for price. So therefore our first target could have been definitely the right around here. And then with our profit target, because we are trading a market maker buy model, not a retracement, because we know, we have in mind that the upper quadrant for regular trading hours is higher, we target external liquidity, which would be the New York Open Kills buy side liquidity. So a profit target could have been right here, or even higher within the high time frame gaps right here, or near the London session buy side liquidity. So that's really important to understand, that the urge, or I think you can call it the urge for NQ to trade back to the upper quadrant of regular trading hours is stronger than following the trend afterwards. So basically what I mean by that is, maybe I will just delete this one. Yes, I just delete yesterday's for a second because it's too messy. So right here we have our new opening range gap. So that's basically, we have a new opening range gap to the downside and minus 271 handles. So if we are above 121 handles, we are in trading conditions. Therefore, we expect NQ to trade back to the upper quadrant, and then we expect actually NQ to follow the trend. So we don't want to chase these lower prices. That's only manipulation lower, and we want to trade with regular trading hours back to the opening range gap. But it is important to understand that for every day it's a bit different. So on some days, basically the important move is trading back to the upper quadrant, and I think in most days that's like the more important move. But in some, we only like trade in really like high resistance back to the upper quadrant, and afterwards we get a really nice setup, and then we can target shorts again. So it's like depending on the daily conditions, on the day, it's always a bit different. You have to analyze that, but actually after trading like to the upper quadrant, we could expect NQ to follow the trend lower. So actually, the fact that we did not really respect the upper quadrant, we are trading around it. So basically we are accumulating or just consolidating around the level. So that's also a way to show or that's also a way for NQ to show us that the level is important. But if we would want to take shorts, target shorts, we would have to see like a cleaner reaction of the upper quadrant. So actually not the upper quadrant, the lower quadrant. But if you like coming from the downside, for me it's like also like the upper quadrant. I don't really know, but you know what I mean. So basically like because I've also like maybe noted it the wrong way. It should have been like this way, I think. So from 0 to 1. So now we have basically the upper quadrant right here, but it doesn't really make a difference. You know what I mean? So, but yeah, that's basically it. The important is like to find which days prefer to like have their main move within our trading time, within our like also like in our AM session, is either like the direction to the lower quadrant, or is the direction to after trading to the lower quadrant down again, so with the trend. So that's really important. But yeah, we will see how it plays out. Maybe we also like will trade eventually lower with later on. So now it's actually looking kind of bearish. So we could also like we could also like trade just around the level right here, and then with, I don't know, 1 p.m. we trade lower, or with the news at 12, so, or 12:30. I think we have still like high impact news. So actually that was also like a bit not perfect to take a London close macro in here, because we have high impact news at, let me check, 12:20. So actually relatively close to the London close macro. Therefore it's reasonable that we consolidate in here. And the long right here is actually not even wrong. But yeah, I think actually I had a high time frame gap right here. I don't know where maybe I have deleted it out, but yeah, so still should have like had a wider stop, but at that point it's like also a bit too late. So we only want to enter, as you know, near consequent encroachment. So therefore that's actually a bit chasing price, but I wanted to be like, oh, I was really sure that we would expand to the upside as we did, but I was I did not want to risk too much. So therefore I just kept my stop tight. I don't know, it's okay. So I can live with that, but yeah, it's not perfect. I really like the trade idea down here. So that's basically our perfect trade, as I mentioned already. But yeah, I really like how we basically have like the perfect two examples. So yesterday we could not expand to the upside. So let me show you right here. So I also like, I did not was can you say that? Or I haven't been home. I don't know how to call it. I haven't been home for the move right here, so I had to enter right here. So right here was basically chasing price, because we had also a bearish SMT. So therefore, and also we like with that move to the downside, we traded back to the upper quadrant of the new opening range gap on regular trading hours. Therefore, we had a bullish, so a new opening range gap higher. So we traded back to the upper quadrant with trading lower with the opening, and then we basically had a perfect market maker buy model in here. And then with like sweeping the buy side liquidity, with sweeping the external liquidity, the market maker buy model gets completed, and also the bearish SMT. So right here you should not really expect a expansion to the upside, because we already reacted off the upper quadrant, and that could have been already your expansion. So yeah, and now the difference, so like today our move was not after reacting of a upper or lower quadrant of a higher or of a new opening range gap, but now we traded like back to the opening range, to the upper or lower quadrant of the new opening range gap. So yeah, that's basically these two differences. So therefore we could expand to the upside, and that's basically it, I think. But yeah, I don't know. It's a bit messy, but I think you can understand it. Maybe rewatch it. I really like the difference from yesterday to today. So today we could definitely expand. So we should have not kept like these the small targets right here aren't perfect, but yeah, I should have targeted higher prices. But I will get that. I will get there definitely, and yeah, I like it actually. So yeah, I think that's it.